Today is the day you have all been waiting for, the day I destroy GoPro. I'm going to destroy Wynn Resorts. I'm going to destroy Google once and for all. We're going to find out all the faults in these companies, all the negative things, all the bearish case. I'm going to lay it out for you guys. I'm going to lay out the complete bearish case on why I should not be involved with these stocks. So let's just enjoy this, guys, and let's get into this. So first off, we're going to look at, we'll leave GoPro for last. We'll leave that one for last because I know that's the one you guys are probably waiting for the most of all of them. So first off, let's go ahead and get right into Google. So Google, first, and by the way, I just got to say this before I even get into this, guys. Obviously, if you watched the video yesterday, I posted the 3 stocks I'm buying, 3 stocks I'm most bullish on for April 2017 moving forward. Obviously, they're these 3 stocks I'm like more bullish than ever on these stocks. So don't get misconstrued that I'm like coming at these stocks because that's like the whole purpose of this video. It's not to like be soft on them. So I'm going to come at them, but don't think I'm bearish on these stocks just because of that, guys. So let's get into this. So number one, we're looking at Google first up. First up's Google. So Google, first right off the bat here, guys, this is a company that has over $86 billion in cash and investments. And they have no short-term debt. They have long-term debt of around $3 billion. So basically, this is a company that has around $83 billion in cash and investments just sitting around. And I'm like, why can they not do something with this money? I think it shows, a lack of management. I mean, no share buyback, no paying out dividends. There's a difference between keeping money around for a rainy day and having such a ridiculous sum of money around that it's unrealistic to have that much money around. That is a situation Google's in right now where they have way too much cash on that balance sheet, way too many investments that they should be either buying back their own stock, paying that back to shareholders in the form of dividends, things like that. Remember, dividend stocks usually get a better premium than stocks that don't pay dividends because there's a certain segment of investors that only like dividends. So if Google paid out a dividend at least, there's something there. So that's the first fault I look at Google. I'm like, why do you have so much money on the balance sheet and you're not doing anything with that money, guys? So that's number one negative on Google. Now, number 2 negative on Google is this is a company right now that has a PE ratio of 30. Now, of course, that could change in the future, but as of right now, it's a 30 PE ratio based upon what they did for numbers last year. That's a gigantic number, guys. That's a large number, especially for a company their size. It's a very, very big company. So a 30 PE ratio at a company that size, that's a hefty PE ratio there. That's another reason. Now, let's talk about Google Pixel for a minute. The Google Pixel phone, right? Why should Google succeed in this game? Why should they succeed when you look at the competitors they're going up against? They're going up against the almighty Apple. They're going up against the almighty Apple. They're going up against the almighty Samsung. 2 smartphone beasts. And then they're also going against tons of smaller companies that, take a little market share here and there, but they have to go through the behemoths of Samsung and Apple. It's a very, very hard thing to do. The same way it would be hard for Apple to create a successful search engine, the same way Google is. That would be a hard game for Apple to compete in. Same thing on the hardware side. It's hard to compete with Apple. It's really hard to beat Apple. I mean, that company is almost unbeatable, and it's really hard to beat Samsung. So Google has its work cut out for them as far as the Google Pixel phone goes, guys. Now, let's talk about some of the failures this company has had recently that they've poured billions of dollars into. One being the self-driverless car, the driverless car. This has been, in my opinion, a total failure on Google's part because they plug so much money into this program and they don't have anything to show for it as far as what do they have to show for it. I'm looking at Tesla, right? I'm looking at Tesla. They have self-driving cars already that are mostly done from NVIDIA chips in a lot of the Tesla research. And they're out in front of everybody. And I'm looking at Google, like you poured all this money, you got all this hype for the last, 5-10 years. They've been getting hype as far as a self-driving car, and I haven't seen anything to show for it. And Tesla's the one that actually has a successful self-driving car actually on the market, guys. So I'm looking at Google, I'm like, you spent all that money and you couldn't be the first to this game. And then I look at the Google Fiber deal. The Google Fiber, you know, this was the high-speed internet service they were going to build out to, you know, communities all around the United States. They got to 9 different cities, and it's basically gone kaput. I mean, they basically just, you know, shut down they haven't expanded any more cities. They were supposed to keep expanding. They've totally shut down the expansion of the cities, and this is a situation now. They're talking about they're not even going to end up giving customers the service that have already paid for it in Kansas City, for instance. So, I mean, that program's just a mess, and it looks like they might end up just shutting it down eventually, and for sure not expanding it to more cities. They've fired most of the employees that were in front of those divisions and whatnot, so that's a lot of money. This is billions of dollars in investment that just right out the window that they failed on there, guys. Now, the last thing we're talking about as far as Google and the negativity is Google could lose up to $750 million from an advertiser boycott related to ads appearing next to extremist content like videos. So basically, what the situation was on YouTube here, this platform, a lot of a lot of big, huge companies were showing ads, right? And then for some reason, they think some of the ads were being shown on extremist type, you know, channels and some of those kinds of things. You know, I know last month, or it was either last month or the month before, there was a whole PewDiePie controversy with the Wall Street Journal, and, you know, people were trying to call him a Nazi, things like that. And I think that just kind of fed into this whole thing. And now analysts are expecting YouTube to possibly lose $750 million in revenue this year from because a bunch of huge advertisers have basically frozen spending on YouTube. About 7.5% it's estimated. So, and I see no reason why this isn't true, because I've actually seen in my own channel where views are up, views are the record highs right now, but my advertising revenue is actually down week over week. And there's no other explanation than 7.5% of the advertisers cut back on their spending, guys, have basically frozen completely. We're talking about huge corporations that spend millions, if not tens of millions of dollars each on advertising per month, have basically frozen their ads. So I see no reason why this isn't true. So I look at that and I'm like, that's not a good thing. That's not a good thing. So we see here, this is a bearish case for Google, and this is a good thing to do, guys, because you gotta whenever you go into investment, you should look at it from a bearish standpoint of, you know, what could go wrong, what are some of the negatives with the stock. That covers Google. Let's move on to Wynn Resorts now. So Wynn Resorts, first up here, the first negativity is the number of hotel rooms in Macau. We know Wynn Resorts has, you know, hotels in Vegas and hotels in Macau, right? Huge resorts. The number of hotel rooms in Macau is set to increase by 39% over the next few years. Official data from the Macau government disclosed on Friday show that there were 17 hotel projects under construction and a further 32 projects undergoing government approval at the end of 2016. They would need to provide the Macau market with nearly 14,150 new hotel rooms. So this is, I mean, a lot of supply coming online. A lot of supply coming online in Macau. So Macau is in a situation where they've got to keep the growth going as far as the amount of visitors coming in. Otherwise, this could hurt a company like Wynn Resorts, right? Because other hotels might end up having to just cut costs to extreme amounts. You know, give away hotel rooms for free just to get people in, or super cheap rates. So someone that might have stayed at the Wynn, a premium experience, might trade down a little bit just because it's so insanely cheap to stay at a place that's a little lesser experience. So Macau's got to keep the growth going. If they don't keep the growth going as far as the amount of visitors coming in, then that could be very, very bad for my Wynn investment, guys, because 39% increase in just the next few years, that's dramatic. A bunch of hotel rooms coming on. Now, the next negativity we got going on here is Wynn Resorts is at a current PE of over 48, which is insanely high for something I would invest in. Now, of course, we know that things might change in the future, but as far as just looking at it from the standpoint of what they did last year versus, you know, their PE ratio, it's a 48.5. That's really, really high, guys. That's really, really high. And the next thing up here we're looking at Wynn, we're in a situation with Wynn where they have $2.5 billion in cash. They basically, between cash and investments, $2.6 billion. But now throughout the years, if you look over the year over year, now they're up to, as far as debt goes, they're up to over $10 billion in long-term debt, versus they had $6.6 billion a few years ago, but they, with the whole Wynn Palace project, they've taken on a massive amount of debt, and now they basically have 4 times more debt than they do cash, guys. Something to take into account there. And then the last thing as far as Wynn Resorts go is actually what we already covered, or no, excuse me, this is not what we covered yet. So Wynn Resorts is extremely, extremely reliant on a strong economy. Now, if you look at this chart here, guys, March 1st, 2009, what was that stock price? That stock price was $19.97. Wynn Resorts is so, I mean, if the economy fails and it really struggles, Wynn Resorts stock gets hit almost worse than any stock out there. Almost worse than any stock out there. So you look at Wynn Resorts here, and you know, if something happened in the economy, like a bad recession, this is a stock that will get absolutely obliterated, just like it did in 2009. Because remind you, in 2007, Wynn Resorts, this was a $120 stock. Then it drops to $19. So dramatic change there, guys. And last but not least, let's go at you, GoPro. We're coming at GoPro next. So the main issue we're going to talk about with GoPro, the main negativity with GoPro, is that disastrous Q4. Revenue during the crucial holiday quarter slid 5.7 versus a year ago to $540 million, well shy of analyst numbers, which were expecting $574 million. A huge miss by GoPro in that Q4, a gigantic miss. I mean, it's just a horrible miss of numbers there for GoPro. So now, why was this? First off, let me just state that this is the worst. There was the worst quarter I've ever, of a stock I held, especially my biggest investment. It's the worst quarter I've ever seen a company, as far as just fumbling the ball, as far as just choking so bad in the fourth quarter. Like, how could you screw up that bad, guys? We're only going to talk about the main issues that they had in Q4 here, which is one, Hero 5. Hero 5, this was a flagship camera launch, right? They hadn't launched a flagship camera in 2 years, mind you. 2 years had been since they launched a flagship camera. So their big launch, and they could not even produce enough units to basically get the marketing from the retailers, because retailers like a la Best Buy and some of the others were going to run marketing programs during the holiday season, November, December, for GoPro, basically cover the advertising cost of that to get people into the store to buy GoPros, right? GoPros did not have enough units during the month of October to build up to that November, December. So many of the retailers, if not all the retailers, and we're talking about worldwide retailers, pulled back that advertising spend that they were going to use on GoPro and, in flyers, online, all these types of things. They pulled that back because there simply were not enough units in the stores. There simply were not enough units for it to make financial sense for the retailers to go out there and spend the money advertising those kinds of things. And then GoPro also didn't get the Hero 5 into Amazon until it was almost November. They had a lot of issues with Amazon, and I'm like, oh my gosh, how could you, 2 years to prep up for this, 2 years, and it's just so screwed up. Then we had the Karma launch. Oh my gosh, what a disaster. What an absolute disaster. So first off, Karma drone had been talked about. GoPro had basically announced that they were working on a drone like 2 years prior, right? Officially announced it. And this was a situation where this drone was delayed a couple times. It was supposed to come out around this time, then they delayed it again, and then it was supposed to come out around this time, and then they delayed it. Okay, now we're going to delay it till the Christmas quarter, till Q4, and that's when it's going to come out. So they delay it. Then the units don't even, okay, first off, then they finally do release it, right? And it was underwhelming as far as the amount of features it had in it. So it was supposed to be one of those drones that really blew everybody away and like put DJI in panic mode type situation. And GoPro underwhelmed people. That's not to say it's a bad drone or something. It just didn't have that GoPro effect like, wow, GoPro did that. Oh my gosh, they built the best drone in the world. They did not do that. They did a good drone, but not a great drone. That's the bottom line. So it was underwhelming. Then they had production issues with the Karma drone. They didn't get nearly enough out there. Then on top of that, then all of a sudden karmas are flying out of the sky, or falling out of the sky, I should say, not flying out of the sky, falling out of the sky. Oh, and they have to do the huge recall. And at this point, you know, GoPro stock had finally been on the comeback. You know, it was $16, $17 a share, and it was like, okay, now we're starting to come back. We're starting to get it now. We're starting to get those great gains. And the stock just got obliterated. It just got obliterated, and it deserved it because what an absolute disaster. Then they finally get it back on the market now and whatnot, but it's like, holy smokes. Q4 was supposed to be one of those quarters where just wowed the world. Just like, oh my gosh, GoPro is back in growth mode. Not just growth mode, because they did still grow 23% year over year. But it was like supposed to be the quarter that's like such ridiculous growth that it's like GoPro's back to a super hyper growth company type thing now. And instead it was just negativity, negativity, negativity out there because of GoPro's screw ups that honestly deserved the media attention that they got, the negative media attention. So what a debacle Q4 was. So the other thing I want to point out here is let's look at the revenue. So obviously revenue declined over 30% last year. Over 30%. And that's what happens when you don't launch a flagship camera and you have a debacle in your other products. And then you look at the amount of loss they took. They lost $419 million last year. Let me repeat that one more time. $419 million GoPro lost. GoPro, this is a company that's like a market cap of a little over $1 billion, and they lost $419 million on revenue of $1.1 billion. Holy smokes, the whole world's lost its mind. So obviously GoPro has some issues that they're clearing up now and whatnot, but I don't even want to get into the good stuff because this video is all about the bad stuff, all about the ugly. If you want to watch the good stuff, then go watch the 3 stocks I'm buying video for March. Then you can see, or excuse me, for April. Then you can see all, you know, all the positivity and all the reasons I'm bullish on these stocks. This video is just to point out all the bearish reasons, all the reasons maybe I shouldn't be investing in it, all the reasons I should be mad as a shareholder of any of these stocks, things like that, guys. And like I said, if you ever go into an investment, I highly suggest you do something like this where you try to break down the stock and you try to look at some of the negative sides of that stock too, just so you can, you know, be prepared and when things go wrong and you understand the bearish case better than even the short sellers do, guys. So anyways, I hope you enjoyed this today, guys. Hit that thumbs up button if you did. And if you just came across this, you have not subscribed yet, you may want to. We talk personal finance in the channel. We talk entrepreneurship. We talk the stock market, the most of everything. Thank you for watching, guys, and have a great day.